So today we're going to talk a little bit about the second new year. We joke in our family that there's January 1st and then there's Labor Day when everything actually begins. So here we are in the waning weeks of August, and we already get that sense of things ramping back up. This is going to be an interesting year with schools starting up in a different variety, sports maybe not starting, maybe starting. There's just a lot of turmoil that's pretty consistent with what we usually have after Labor Day when everything kicks off fast and furious into the end of the year. So I wanted to revisit a blog that I wrote earlier this year before January 1st that tried to help think of constructive ways that we can prepare for the new year to come. So a lot of times we get caught looking forward and looking backward in unhealthy ways. So we talk about the extremes of nostalgia. So when we look backwards and long for those days when things were much better or different, and we kind of want things that are no longer there. And then on the flip side, when we look into the future, we try and predict things and with concrete certainty say this is absolutely going to happen and run the risk of being very right or very wrong. Both of those things, if we're trying to sit around the campfire with our friends and think about days gone by or hypothetically what's going to happen, that's good campfire conversation. But if we're trying to make decisions, being too nostalgic or too predictive can be harmful because one is living in a world that no longer exists and the other is setting yourself up for potential failure if you're wrong about your prediction. What we prefer to do is bring those boundaries in a little bit closer to the present. So we're not out here on the extremes, but we're thinking in terms of looking backward and being reflective and looking forward and setting reasonable expectations and managing our expectations. So let's first talk about looking back. So we've had a heck of a year so far. The last 6 months have been a lot of turmoil for many reasons, and everyone's experiencing it differently. Now's not a bad time to reflect as we would at the end of a calendar year and say, okay, how did I handle this? What decisions did I make or didn't make that would have helped the outcomes be better for myself, for my family, for my job? And it's a time to reflect on how you might improve because we're still going back into an uncertain last few months of the year, but it's an opportunity to maybe make better decisions or even decide what things you don't need to be thinking about and be more focused as you head into the fall. Then when we're looking forward, everyone's trying to predict election season, predict what's going to happen in the stock market or what's all the things that could be between now and December 31st. But rather than predict, let's think about what our expectations could be. We know that there's going to be a lot of noise in the media when it comes to the election. Do you have a plan for how you're going to limit your exposure if it raises your stress levels? Can you manage your intake of social media? Can you manage your intake of television news? If those things are going to be creating additional stress in your life, how can you create an environment where you're managing that and keeping your expectations a little bit in check? Another thing you want to do is, especially when it comes to investing, managing expectations about what your investments are supposed to be doing at this time. So we talk about not knowing when you're playing offense and playing defense. If you're looking for safety, don't try and find it in the stock market. We know that even though returns have been pretty steady here over the last few months, and we're back to almost flat on the Dow Jones Industrial Average, so the NASDAQ is very positive for the year. Don't seek out safety in places where you should be playing offense. On the flip side, don't look to make extraordinary returns from things that are offering you safety on that end too. So something like a bond index, it may be up 4 or 5% so far this year, but our expectations for the future are lower because interest rates have gone down so low. So just know when you're playing offense, when you're playing defense, and that can help to manage your expectations. You don't need to get the S&P 500 price target right by the end of the year to be successful, but you do need to know where you're taking your risk and where you're not taking risk. So just to recap a little bit, if we're trying to prepare for a ramp up of activity and a really busy season after Labor Day on the second new year, we want to try and limit our nostalgia because the days of 2019 are long past, and we want to try and avoid predicting what's going to happen in the future. Instead, reflect on what's gone well for you and what you could improve on in the last few months, and then also manage your expectations and avoid trying to lock yourself into an outcome that you can't be sure of. So thanks for your time today. I'm Dennis Morton from Morton Brown Family Wealth, and I look forward to seeing you again soon.